Hello, everybody. Welcome back to the Tokyo FinTech podcast. Today, we're very excited to welcome Sakuta-san, who's the Senior Vice President at Deloitte Tohmatsu Financial Advisory. Good morning, Sakuta-san. Welcome to the show.
Good morning, everyone. Thank you very much for having me today.
Sakuta-san, Deloitte, of course, is a very well-known brand around the globe, but I think most of our listeners probably understand it as an audit and consulting firm. So financial advisory is a very special business for Deloitte as well. Maybe we start with explaining, first of all, what you do.
Sure. At Deloitte globally, we have 5 categories of our businesses. One is, of course, audit and assurance, and another one we call risk advisory, where we advise on companies' internal control, etc. And we also have a very large practice of consulting. And then, we have tax and legal practice, which is growing year on year. And the last one is financial advisory, where I belong to. In financial advisory, we provide services across M&A lifecycle, and also we provide services in connection with large corporates' crisis management, including restructuring services as well as forensic service. So I'm from corporate finance practice of Deloitte Japan, which is a part of our M&A practice.
Understand it a bit like an investment banking business, basically.
Correct. Actually, in our corporate finance practice, we have more than 150 people, actually largest practice in Japan.
It's amazing. And so your personal journey, you've just returned to Japan after a stint in London where you covered the European end of that business. How was that experience being on the other side, basically?
Yeah, so I spent in London for almost 4 years, and I was responsible for the Japanese M&A practice back there. I was covering all the EMEA region based in London, covering all the region. After coming back to Tokyo, coincidentally, that was a time when we got together with our group company called Deloitte Tohmatsu Venture Support. The Tohmatsu Venture Support is our group company, which provides a wide range of services, mostly to large corporates who are looking to make big shift using open innovation, or services to venture businesses who is looking to grow further. Back then, that was actually June 2019. Coincidentally, I came back to Japan at that time. I happened to take on the new role to lead the collaboration between 2 entities. One is the financial advisory and venture support from financial advisory point of view. So I'm leading the collaboration, and one of the initiatives we are putting more effort is innovation finance advisory, so-called, where we provide advisory service to venture businesses in connection with their fundraising as well as M&A exit. That's my background.
And so also in that role, you're covering all industries, is that correct?
Yeah, I'm originally from TMT sector, technology, media, telecom sector. Yes, so I'm a technology background guy, but yes, we cover all the venture businesses who is looking to grow further globally.
So our conversation today will be more around the venture capital, corporate venture capital ecosystem in Japan broadly, not necessarily fintech specific, but where we have specific insights on fintech, of course, we'll touch upon that. Now, you mentioned you came back in the middle of 2019. It feels like probably the second half of 2019 and the first half of 2020 is like 2 totally different things. So what have you observed how CVCs and VCs in Japan have behaving initially when you came back, and now how are they reacting to the crisis?
So after the previous financial crisis, the investment amount and the numbers made by Japanese investors has been growing over years till 2019. And in 2019, there is more than 270 billion JPY in investment size. But unfortunately, in 2020, obviously, it will sharply drop. And most notably at CVCs, There was a Deloitte survey on CVC investment budget in 2020, and 81 CVCs answered to that survey. Only 10% says they will increase the budget this year, while 90% said they will decrease the budget. So more or less, I view there will be only 60% or even 50% of previous year's budget will remain this year at CVC. That will significantly impact the whole market, I think. On the other hand, interestingly, pure VCs will remain active this year. And I view there are a couple of reasons here. One is VCs already established a new fund until 2019. They have a fair size of dry powder already. And some VC also say investment performance was very good with those invested right after financial crisis back in 2008. So they said they have to continue investment. And personally, the reason of the good performance of investment back previous financial crisis was not only because of the good valuation, but also because of the disruptive change in technology side, like new normal. The reality back in 2008 was, many startups born after smartphone evolved in 2007 or 2008. And often such disruptive change like smartphone creates new winners in the market, and previous winners tend to lose its position in the new market, like IBM, Intel, whatever. So history tells. And where there's a big environmental change, there will be many new businesses that grow. So currently, as a result of COVID-19, we expect many startups who are native to this new normal will evolve going forward. So those new startups will be the winners in the next 5 to 10 years. So that's the reason why financial investors and even strategic investors should keep the momentum to make investment into the startup.
And there are many voices that say that the pandemic now brings really digitalization in Japan forward, in addition to working from home. And there have been announcements from very large and very traditional Japanese companies that they will stay in working from home mode until the end of the year, for example, which probably 6 months ago nobody would have imagined. Do you see your venture clients looking into that space for tuck-in acquisition or investment specifically?
Yes, as a result of the new normal, many venture businesses were forced to shift their business drastically. For instance, we recently working with a startup who are providing services in the inbound tourism type of space. Obviously, there is almost nil tourists from overseas, and they were forced to shift their business towards more domestic focus with more digitalized business focus. That's just an example. Yeah, definitely most of the venture businesses are changing their strategies to adapt to a new normal. And as you said, the digitalizations, DX is definitely one of the biggest agendas.
Got it. Thank you. We all know it's always said Japan is different, and so it would be surprising if the venture capital business here was exactly the same as in other places. What are the differences when you deal with VCs, CVCs that are Japan-based, originate from Japan? How do they behave differently? What do the startups need to know when they engage with a Japanese VC compared to a California, Silicon Valley type of VC?
There are a couple of differences, which is most notable. And one is, I think, during the course of investment process, many Japanese VCs are providing term sheet right in the last minute of the process. So very much a later process, they will provide term sheet, while Americans or Europeans or other investors globally, they're not hesitant to provide term sheet in early stage of the investment process. That's a huge difference. But from the venture business point of view, I think in Japan, from Japanese investors, they get the term sheet the likelihood of the closing is much more when you compare Japanese to other key market investors.
Do you see a difference in the duration of the negotiation as well?
Yes, that's another good point. You can say, of course, CVC is created in order for corporates to have a faster decision-making process. From what we've experienced, even at CVCs or new business development teams who is handling venture investments, there tend to be occasions where we have challenge in terms of the timeline. So often with Japanese corporates, CVCs, it will take 3 to 4 months for their consideration of the investment. And sometimes it takes more. So I think the good strategy is to approach good candidate from Japan well in advance. That's another important point. And interestingly, CVC's investment may end up with investment directly from headquarters sometimes, when they feel investment size is not sufficient with their CVC budget. In that regard, you have to well prepare to secure the sufficient timeline with the Japanese corporates. So the timeline is definitely another point of the differentiation.
How do you view the engagement of Japanese VCs once they made the investments? Are they hands-on, hands-off? What are their expectations in terms of being involved and also mentoring the business that they invested in?
Right. Venture capital business of itself is more of a kind of localized business, to my understanding. Generally, the local venture capital who knows the local market should be the process of the fundraising. Well, many Japanese investors who are making investment outside of Japan is following the lead investors. So that's the reality. I think less than 20% of the Japanese investment overseas led by Japanese investors. That's my gut feeling. When it comes down to the overseas investment done by Japanese, the most important thing for Japanese investors is to have good lead investors who can trust, and then to see if the timeline can be something they can follow in terms of their decision-making process.
So you would also say that Japanese VCs are more biased towards the later rounds when you've seen some traction in the startup and when there's clarity around the quality of the previous investor base, for example?
Yeah, that's correct. So for instance, we are the only firm in Japan who provides services to global venture businesses to help them raise funds from Japanese investors. So none of the big four or none of the investment banks are doing the same business in Japan.
So also let's take this back to what you said in terms of the local nature of the venture business. So for any startup looking to enter the Japanese market, there is obviously the market entry itself. And then alongside that, there could also be a Japanese VC. What is your recommendation, your advice for startups? Should they try to do both in terms of a Japanese investor who's also active in making introductions and can facilitate some of the connectivity, actually significantly helps the market entry? So if you have both the investor and the market entry together, you have a higher probability of success.
For many, startups overseas, Japan is the most difficult market to enter. And definitely they need support in entering into this market. There are many VCs who have good access to strategic investors, and some of the VCs operates CVC for Japanese corporates. So they have very good connections. So I think the important thing is to get connected with VCs who knows the targeted market in Japan. And also there are some large advertising market companies like Dentsu, Hakodo. Those can be of help when it comes down to the connection to Japanese potential partnership. Of course, as Deloitte, we are providing services to venture businesses in connection with their open innovation in Japan. So definitely can be of help as well. With those helps from Japanese corporates, including professional firms, it's much easier to understand the local market in Japan and get connected with the right partnership. So that's an important thing, I think.
Got it. Thank you. If you look at it from a sector perspective, which industries do you see as the most active in demand? And second part to the question is, what are the areas geographically that Japanese VCs focus on outside of Japan?
I include CVC in the definition of VCs here. Many VCs are looking at a space like AI or SaaS, IoT, FinTech, or healthcare, and those are the hot areas. I think the trend is in line with what we've seen globally. And the reason of the AI or SaaS business are hot is, because of the valuation, I think. When it comes down to the SaaS business, valuation can be higher than other revenue methodology. So everyone is looking at the SaaS model, and many VCs are investing into the space as well. And also in healthcare sector, there are many remote diagnostic technologies or detection technology using AI. Those technology can be in a new normal environment. Those are also the sought after sector, I think. For many listeners, fintech is one of the most interesting sector. And definitely there are many Japanese investors who are looking at the fintech space as well. And of course, what we've seen at this moment is attractions at social scoring type of business, or of course, a payment related business. We've seen some interesting development in anytime salary payment type of business, which is growing in Japan recently as well. So those are the sectors.
Geographically, where do Japanese VCs look at? Historically, it's been obviously Silicon Valley focus. Has that broadened out?
In general, many Japanese are looking at APAC region, mostly SEA and India. One reason is because geographical distance. And another reason is that the market is growing. So we're working with many SEA startups or Indian startups who are looking to raise funds from Japanese investors or making a business together with Japanese corporates. Yeah, the traction is very good in Asia. Of course, Israel has been very attractive market over years. But interestingly, there hasn't been not many Japanese investors who have made investment in that market. And one reason is Japanese nature, which is very conservative. When it comes down to the Israeli startups, many are very edge technologies. And it's not a business of itself, but just very edge technology. So it's more of an early stage technology. Usually Japan is the last person who jump on the board. We feel difficulties in inviting Japanese corporates to the fundraising round of Series A or even B because, Japanese are very conservative and it takes time to assess the technology of itself.
So they're late, but then sometimes they make pretty big bets. So if I just look at the last quarter, I think we've seen 850 million by MUFG put into Grab. So it's in line with what you talked about, Southeast Asia. And then Sompo spent 500 million in Palantir, literally 2 weeks before they filed IPO papers. And also these sums, as you noted before, are beyond the CVC fund. So these are headquarters style investments, but significant investments in companies that have pretty good traction.
One good approach for Japanese corporate is to work together with unicorn companies to make the new business. As I said, many Japanese are conservative and they want to make sure they are working together with right startup who will win in the market. So that kind of alignment may happen going forward, and the deal numbers will grow year on year, I think. And we are supporting Japanese large corporates in their scouting of the unicorn businesses to make a strategy to create a new business together with that large names like Gravel Frontiers. I think collaboration with unicorns will increase going forward.
I mean, you're in a super interesting spot helping Japan to innovate with some outside pressure, which sometimes is necessary. Maybe the final question, if you project out 5 years maybe, and what is your expectation for the impact that these investments will have had on how business is done in Japan, how much digital it is, how much AI is used, and how people work overall and how it impacts our daily life?
Personally, in the fintech space, most notably, I believe individuals will obtain more power in controlling their information. So using the blockchain technologies and with the information bank type of thesis, I believe there will be many startups who will offer individuals to handle their own information and monetize by themselves. And I believe many corporates, the insurance companies, they will use that information by purchasing from individuals. Or there will be, more analytics services who provides, scoring to the individuals, and individuals can present that result to the insurance companies or whatever to get a better deal. I think that kind of wall will come very soon. In our pipeline, there are several companies who has similar ideas of future businesses.
It's actually a super interesting area given that Japan has pretty protective data privacy regulation. It's an opportunity for Japan to take a leading position here where we protect the data and can monetize it based on the data owner's decision. Would be fantastic compared to some other markets where the data is free and abused. I think it will be interesting to observe in Japan and a great opportunity, as you say. Super. I think we covered lots of ground. Any final comments for our listeners?
Thank you very much for having me today. Fortunately, we were not able to meet in person at this time of situation. Hopefully, we could get together in person event in near future to discuss further.
Thank you very much, Sakuta-san. And for our listeners, if you're looking at the Japanese markets and you look to connect and raise funds here, you know where to go. Sakuta-san and Deloitte certainly a good place to start. Thanks again, and we'll be back soon with a new episode. Thanks, Sakuta-san.
Thank you, Nobel.